Welcome to the Teaching Tax Flow podcast, where the goal is to empower and educate you to legally and ethically minimize taxes paid over your lifetime.
Welcome back to Teaching Tax Flow, the podcast. I'm your host, John Trapolsky, along with my co-host here, Chris Pecura. How are you, bud?
John, I'm great. And for the first time ever in Teaching Tax Flow podcast history, I'm on your left.
Oh, good point. Good point. Well, in actually, in the sense of mixing it up. So let's mix up topics a little bit. I know we're always talking about a lot of strategies related to tax, correct? So let's talk about something that's actually come up in a lot of conversations lately. And actually, I would bet that all of us, well, I'd say majority of us actually interact with somebody that's in this world we're about to talk about every day. So let's talk about the gig economy.
The gig economy from a tax perspective. I can't wait to talk about it. But first, we have to thank Strategic Associates, our sponsor for this podcast. If you are a high-income earner, real estate investor, or successful entrepreneur with $75,000 or more of annual tax liability, Strategic Associates can help. And if you are in that situation, by the way, congratulations.
Absolutely.
I mean, if you're paying $75,000 of tax, we'd love to talk to you and help you look at that. But also, Strategic Associates would be a part of that conversation. Your first step to saving thousands, and I can tell you our clients have saved hundreds of thousands, is to contact Roger Roundy. His email is roger@strategicag.net, or give him a call at 801-641-2956. Be sure to let him know Teaching Tax Flow sent you, and you can see his information in the show notes. So hopefully, if you're a gig economist, you get to the point where you need to talk to Roger.
And before we get into it too deep, so this whole gig economy may be new. The term may be new to some people, but the actual individuals working in it, I mean, heck, people might actually be a gig worker and they don't even know it. So what's our definition, at least by IRS definition, what makes up gig work? Actually? Absolutely.
So the IRS has some resources for gig workers. And according to the IRS, a gig work is certain activity you do to earn income, often through an app or website.
Like
Uber,
Uber,
like
Grubhub,
drive a car for book drives, Uber, rent out property or part of it. Now, this one's interesting. So our friends that are doing house hacking, meaning renting out a portion of your home, or actually renting out a short-term rental, or your home is considered gig work. There will have other content on that. Running errands, completing tasks. You know, an example would be someone that goes and grabs groceries for people.
Like a task rabbit, I think is what one was called.
Sell goods on. I haven't heard of that one. Sell goods online, rent equipment, provide creative and professional services. So those are just examples of what the gig work is, according to the IRS. Typically, a gig work will be accompanied by a 1099 from someone. And typically, someone that is a gig economist has a primary job, but not always.
So you could, like somebody by IRS definition, so providing creative or professional services, I think is how they worded one of those. So really, that could be a freelancer of any sense, right? You could be a creative writer, you could be a marketing consultant, you could be a graphic design
software programmer,
an engineer, technically. I mean,
absolutely, software
kind of fall into that.
Absolutely, a software engineer. We have, I know, just thinking about friends and people in our private practice, we have people that are clear to closers in the real estate business. We have people that really, it could be anything. Some musicians do. Let's say they work as a full-time music teacher, and they give out music lessons on the side. Or teachers. Some teachers do private tutoring as a side gig.
So this might also come interesting to somebody, because not too long ago, if I remember right, there was kind of something that was up in the air, right? Like you had, we'll just use Uber drivers, for example. I think that's probably one that we kind of run into maybe the most, at least everybody generally. A lot of them, at least from what I know, they didn't know how to file their taxes, or there was some kind of gray area, right? So I don't know personally, but if they weren't getting, 1099 by Uber, or Airbnb wasn't issuing 1099s directly, it was kind of up to the individual. And that's changed now, correct?
Exactly. So the thing is, we're going to have some more content coming out with the rules for 1099s are going to be changing. They were supposed to change here for the 2022 tax year, effective basically 2023 now, but they've got bumped a year. We're required to pay tax on our gross income, regardless if someone provides you with a 1099. Now, again, you run into situations where you have a babysitter that made a couple $100 over the year helping out. There's thresholds for filing, obviously, and when you need to file a tax return. Most gig workers simply file a Schedule C, which is the self-employment schedule, and attach that to their personal tax return. And a lot of times gig workers, I feel bad because I can't tell you how many times we've seen that someone receives a 1099 and they don't know what to do with it. Mm-hmm. You know why?
Because they haven't listened or haven't watched the mini lesson.
Exactly. You haven't been a part of teaching tax flow.
And kind of a two-part to that too. So you did mention thresholds. I don't want to get off that too soon. So I know there's a number in place. What is it, $400 or $600? You would know this better than anybody else, as it is right now. So there is that threshold. So if you're under that, you likely will not get a 1099 from that company or organization, correct?
There are a couple of different rules at play. There's by the way, not that you asked me my opinion, but I think these rules are really outdated and the thresholds are too low, and it's actually creating a burden for people administratively, and actually thinks it's creating a burden for the IRS as well. That being said, tangent. Usually you go on tangents.
I know, this is good.
Anyway,
you can have
yes.
the baton.
If you pay an independent contractor for a service of $600 or more, and that person is unincorporated, it could be an individual, a single member LLC that hasn't made a tax election. We are going to be having some people on in the future talking about 1099s. If I pay John $800 for social media work as an independent contractor, I have to issue you a 1099. So that threshold for issuing a 1099 is $800. Now, regardless if I issue you the 1099 or not, you should be reporting all $800 as gross income on your tax return. Mm-hmm. For someone that does gig work, I'm going to read you from the IRS. It says you must file a tax return if you have net earnings from self-employment of $400 or more from gig work, even if it's a side job, part-time, or temporary. That's a very interesting comment by the IRS, because when you define net earnings, I look at net earnings as income after deductions, but I believe that they're referring to net earnings as income after fees. So let's say you spent a week doing food delivery and you made $300 and you hated it and you quit, you don't have to file a Schedule C in that case.
And is that threshold, or is that number, do you kind of assume that is throughout the entire calendar year, regardless of one quote unquote gig, right? That is the collective of all gigs rolled in. So if you're selling something on Etsy, you're renting out your power washer out of your garage, you're house hacking, you're doing 15 minutes of consulting work on an annual basis. It's, even if you're a job jumper, you can't really avoid that.
Exactly. It really doesn't matter. The IRS looks at everything in a calendar year. So if you have one gig that pays you X amount of dollars, you're reporting that. And we run into this a lot when you have bands, for instance. Let's say you had a band. Let's say you were cool enough to have a band. I know it's a stretch.
We can start one. I don't know how good we're going to be.
It would be bad. And let's say you grabbed you and 4 other people and you did a gig and you got paid $2,000, right? But you paid out. You each split the money. The 1099 would probably be in your name personally. So now you've got a pickle, not pickleball, but a pickle, and you've got to pay each band member $400. Well, it's under the threshold, so you wouldn't have to issue a 1099 to the other band members. But in your tax return, you're going to receive a 1099 for $2,000, and you'll have to report that you had outside labor of $1,600 in that case, and you'd pay tax on the $400. course, John, there are other deductions, and that's what really one thing I would love for anyone that's in the gig economy to understand, that many of these people have spent a lot of time being an employee. You get a W-2, taxes are taken out based on the withholding that you let your employer know that they should be taking out. But when you're paying tax on your gross income. Well, with a gig worker, you pay tax on your net income. So if you had to drive to get to that gig and you have a home office, if you had to buy music, if you have any business expenses related to that activity that are ordinary and necessary, you can deduct those expenses and you pay tax on your net income and instead of your gross income.
And I think that's something that, and really to harp that one home a little bit. So there's a lot of, I wouldn't say a lot of detail to scare anybody off, but obviously there's a lot of opportunity there, right? So in a sense, if somebody even just has a basic understanding of some of the deductions that they could take as a gig worker or a self-employed individual, I mean, there are a lot. So, I mean, they're taking advantage of the same deductions. If they make $30,000 a year delivering groceries, they're taking the same, not the same amount in sense, but the same deductions in the same classes as somebody who really could be making $1 million plus being self-employed. They're just obviously taking it a little differently. So say, for example, you are a Uber driver, Grubhub, something along those lines that, you may be doing it part-time. It may eventually pick up and you're doing it full-time. Let's think of a couple things, right? So home office is one. So likely you're going to take a mileage deduction on your vehicle, right? So unless it makes sense to actually dive into, lease or buy, that's a whole nother.
Whoa, we're getting into all this.
We're not going to dive.
That's pretty
deep.
Cool. I'm impressed, Johnny.
But there's some opportunities there, right? I mean, you have obviously transportation costs, so you're taking on expenses, but that's where the deductions really counteract that, if we will.
Absolutely. And in one of our most recent polls in our private Facebook group called Defeating Taxes, the number one concern was that the taxpayers were afraid of how much they were going to owe. And what we want to say is, especially, the one of our passions here at Teaching Tax Flow is to help people out. And if someone earned $5,000 as a gig in the gig world and has $4,000 worth of deductions, it's very hard for that person to prepare their own tax return without some guidance that we can provide on our platform, or go and hire someone, because quite frankly, if you're hiring a CPA to prepare your tax return, if you did $5,000 worth of gig work or $500,000, it takes absolutely the same amount of time to prepare that tax return. It's a couple zeros in the software. So we have a bunch of people that now have complicated their tax situation. They're working hard. We want them to keep more of their money, and they need help figuring out what they can deduct. So you can deduct anything that's ordinary and necessary in your trade or business against that gross income. I just hate when people see that 1099. Golly, John, I've had clients in the past where we reviewed their prior year tax returns in our private practice. Let's say they were selling, they were part of a direct sale. Let's say they were selling, I don't want to name any.
So like nutritional supplements.
Yeah, exactly. Nutritional supplements. And they have a lot of cost to that. Mm-hmm. And sometimes they even have a trip that they won that has an economic value, and they get a 1099 for a ridiculous amount of money, even though they may have a 1099 for $80,000. They truly made $5,000, mm-hmm. and they don't know what to do. And they're trying to navigate through some self-guided tax software and make a huge mistake. And don't, like you alluded to, they don't know that they're entitled to auto and car and truck deduction, home office deduction, cost of goods sold deduction. So that's really where I want people to understand that we want you to have a side hustle. I want people to, like it's kind of funny in the ad read, want to have them have $75,000 worth of tax to pay, but we also want them to legally and ethically pay the tax that they're required to, not anymore.
And something too, I think, it doesn't necessarily have to be a closing note, because we can talk on this for a while, but I think that we definitely drive home one thing, at least that I can think of, that I mean, I could almost guarantee there's a handful of individuals not knowing this, getting into that, then getting the big old surprise at the end of the year that you owe a bunch because you I wouldn't say filed incorrectly, but didn't maximize any deductions. And then it's a basically a snowball effect, right? So let's say somebody makes that transition over to gig work, really doesn't understand the tax implications of that and what their returns are going to look like after some time doing that, especially if say you start in January and really you're cranking a full year of it. You get hit with a very large tax bill. You don't do anything with it, or it scares you a little bit. And this is looking back at our podcast with Andrew Poulos last week as well.
Mm-hmm.
Say worst case scenario, you just don't pay it. I mean, then you're on the naughty list, right? So you're on the IRS's naughty list. They're looking at you. You obviously don't pay it. We're going to assume that you're probably not even going to file your taxes the next year or the year after that or the year after that because it just snowballs. Then you run into a whole host of problems, right? So as Andrew mentioned, the worst thing you can do is not open the letters that you may get, which may be a notice from that. But then also, let's talk about that 3 years. So that statute of limitations, and not to go too deep into it, but just to drive home the importance of having an understanding of this right from the get-go.
Well, you opened up a bunch of questions, and I'm sure we're going to have a follow-up podcast on this. But probably the most important thing that you mentioned was the thought of understand that if you have income from an activity, and that even if your expenses are more than that income, you're going to want to prepare a tax return and put that on your tax return. Because what you have to understand is all the 1099s that are issued to you are also provided to the IRS. The IRS has no idea what your expenses are. So once in a while, you'll have someone that said, "Oh, I got a 1099 for $12,000 because I was doing, had my own travel booking website, but I didn't make any money on it because I spent 12 grand on the package to get started and this, that, and other thing. So I don't have a profit. So I'm not going to put it on my tax return." Well, the problem is IRS doesn't know that. And now all of a sudden you're going to get a notice saying you owe $3,000-$4,000 on your tax return. And now you've got a myriad of other issues. So if you have income, even if you don't have a net profit, report it on your tax return. The statute of limitations is 3 years. So sometimes you might have more deductions than you have income. And that's common when you first start your business and you have a loss. And sometimes that loss can offset your W-2 wages. But if you don't take that loss and in 3 years goes by, then you've lost that opportunity to take those deductions. So, we really want to make sure that people in the gig economy, I think we all have been in the gig economy at some point. And for some people that side hustle, like a lot of people like to say it. And I like the word hustle because hustle it just shows effort, and that becomes your full-time job. So absolutely, we want to make sure that all of our friends in the gig economy, and if you don't do something, someone that does something, really looks at their situation. And I'd encourage them, because we know a lot of times when they're getting started, they don't have tons of revenue. Reach out to us here at Teaching Tax Flow. Jump into our Defeating Taxes private Facebook group. Maybe take a lesson, really small cost, small time commitment to get yourself situated. And I guarantee you're going to have a high ROI on that education. Absolutely.
And I guess without opening a completely another can of worms, I think it's really important, obviously, understanding what your tax situation is going to be. What if you make that shift from a W-2 to just say a 1099, and then also to related, but not, we don't have to get into it, that understanding that a write-off is not something that's free. So we won't jump into that whole realm.
No, we're going to have another podcast on that. But there are no standard deductions in business. But again, we'll talk about deductions, but really keep track of your deductions. And if you get to the point where you have a substantial amount of net income, then you're going to want to start paying estimated tax payments. We're going to have additional content on that coming up. But be organized and have fun. Like, work, have a side hustle, do something you're passionate about, even if you have a W-2 job that you might not be that passionate about. And understand that you get to pay tax on your net income, not your gross income. So
excellent closer. Excellent. Well, this has been a fun one to talk about because again, it comes up a whole lot, and again, it's the goal is to get everybody, or at least those that take advantage of the resources such as this podcast, and really just elevate everybody together. So what do they say? It's rising tide raises all ships, or something.
Absolutely,
along those lines.
iron sharpens iron, as
There
we
you
like
go.
to say.
So it's obviously our Facebook group is a fantastic resource for that. Look it up, Defeating Taxes. And then Chris, you can go ahead and thank our sponsors
again. Thank you, Roger Roundy and the team at Strategic Associates. We hope that some of these gig economists are in touch with you in the near future, or maybe it's going to be down the road. We would love your feedback. Please rate, review, subscribe to this podcast, and we appreciate your time.
Absolutely. Well, thank you everybody again, as always, for joining in with us. A great topic. Again, something that usually comes up, and is this is related just gig workers. However, anybody that gets a 1099, this content is very relevant to them. So we will see you soon, and have a great week.